Morning, everyone. Hope you can all see and hear me. Good morning, everyone. I'm speaking live today here from the MEED Dubai office. And as Richard said, I'll be over the next 20 minutes or so giving a brief rundown of the projects market in the MENA region, setting the scene and context and background for the discussions later to come. So as ever, the data is coming from MEED Projects. MEED Projects is our online projects tracking service. We're covering about 15,000 live projects at the moment in the region, over $10 million. Okay, well, I hope you can see and hear me okay. As ever, this presentation will be made available and is being recorded, so don't feel you have to note everything down. If you do need to look at it later, we'll be able to send it to you and you'll be able to look at it in your own time. Okay, so let's start by looking at the performance of the projects market in 2020 last year. And unfortunately, and perhaps unsurprisingly, we can see that the market fell quite considerably last year by about 40% in the GCC, from $110 billion in 2019 to just $64 billion last year. So quite a dramatic fall, and certainly far lower than the highs we saw in 2014 and 15 when the oil price was above $100 a barrel, when the project market reached contract awards of about $170 billion. Since then, it's been on the decline, but last year this decline accelerated due to COVID. Now, while the market did decline last year, it's not true to say that it affected all countries just as much. So you can see here that Saudi Arabia and the UAE were by far the worst hit in terms of contract awards year on year. Saudi Arabia was less than half, or about a third of the market it was in 2019. UAE about a half, just $17 billion. But then in other markets, actually, it was fairly stable or even increased in 2020. Egypt, as you can see, was fairly stable. So was Qatar, Iraq, and even Oman, Algeria, and Kuwait actually increased the value of contracts awarded in that year, albeit from a much lower base. So it's not always true to say that the market was down everywhere. And it's certainly not true to say that for individual sectors, as you can see here. The construction market was particularly badly hit, as was gas, far below half the level of contracts awarded the previous year. But then if we look at transport, look at power sector, they actually grew last year. And actually the value of contracts exceeded the 2019 figures. So again, it's important not to generalize when we're talking about project market performance in 2020. Now, if any of you had any doubt about the impact of COVID, I hope this slide dispels any of those doubts. As you can see, in the October to February period, before lockdown, before pandemic arose, we were swimming along quite nicely in the region, between $6 and $10 billion of contracts a month. But as soon as we entered lockdown and pandemic took hold in the GCC, you can see the average slumped and value of contracts awarded each month declined rapidly. So that's very firm evidence that COVID had a very direct and negative impact on project spending, as you might probably expect. Now, just a quick aside here, just taking a look at the UAE market for construction. As I know many of you are based in Dubai and focused on the Dubai construction market. Here we see the Dubai versus Abu Dhabi versus Northern Emirates construction and transport projects market. You can see that Dubai historically has been the leader, as one might assume, between 2013 and 2019, clear leader in terms of construction and transport projects awarded. But then in the last few years, we've seen a very rapid decline in project activity in Dubai. This is exemplified here in 2020, when the Dubai market actually fell below the Abu Dhabi market in terms of contract awards. So we can see that the declining prices in real estate, the lack of new project launches due to restriction on new supply has had a big impact on project market activity in the Emirates, and has caused a lot of companies quite a lot of challenges and has forced them to look at other markets as a result. Just very quickly, look at the top contractors last year. There was work awarded last year, as we know, and some contractors did very well. So we can see big Saudi contractors in particular, Nesma Al Mabani, Rad Civil Construction, Al Bawani as well, all did very well. And then we also see that some international firms, UAE firms, NPCC, Sepco 3, Samsung, Doosan, Selene now called Rebuild, and so on, also did quite well last year. So there was some work awarded, and some companies did quite nicely. And here I won't linger on this, but this is just some of the major contracts awarded last year. Again, life continued in many situations, geographies, and markets. You can see here some of the major contracts awarded. A big academic campus server in Abu Dhabi, the relocation of the King Faisal and King Salman air bases and air academies, quite a few desalination power plants, and so on. So there were some substantial contracts awarded in 2020. Okay, so that was last year, clearly impacted by COVID. Now let's take a look at the first quarter of this year to see if the market started to recover. And unfortunately, it didn't. We still see in the first half of this year, going beyond Q1 2021, the market still being very sluggish compared with the same period last year. You can see here Saudi Arabia and the UAE still way down, as is Kuwait, Oman, and Bahrain, way down on the Q1 figures in 2020. So the market has yet to pick up, unfortunately. The only place where it has, and this is a bit of a one-off, is in Qatar. As you can see, some $18 billion of contracts awarded in Q1 this year. And it's a bit of a one-off because that reflects the huge value of investment made in the LNG program there, which has really distorted the figures in Qatar. Nonetheless, it really has helped the market overall in the first half of this year. But generally speaking, the picture we can get from this is that the market is yet to fully recover from the pandemic, and we'll certainly be hoping for an acceleration in the second half of this year. Again, just looking at the construction and transport market in particular in the 6 GCC states, you can see here still very sluggish compared with the same period of January to May last year. You can see Saudi Arabia, UAE, Qatar way down on the same period, first 5 months of last year. Kuwait is up, but from a much smaller base. So it's still very, very disappointing year on year. And as I said, we'll be waiting for the second half of the year to show some acceleration there. As ever, of course, life still goes on, and still being a fairly interesting bunch of contracts awarded across the MENA region this year to date. As you can see here, you get an idea of where these are. Actually, North Africa, funnily enough, is dominating that list. The Hamdaniya Seaport project, massive $3.5 billion contract, was awarded to the Chinese a couple of months ago. Chinese also won the new Al Alamein city downtown Towers. Al Alamein is a brand new city being built in Egypt. Everyone's focusing on the new capital, but actually this is the second major city development in Egypt. Another very interesting contract awarded last month, a couple of weeks ago, to Rebuild or Salini and Prigilia out of Italy, was the first lot of this massive coastal highway linking Libya with Egypt and Tunisia. Actually, pre-qualification was launched earlier this week for the other remaining 3 sections, funded by the Italian state. It's a $5 billion project overall, and there's an interesting bunch of work there as well. So this is why companies are going beyond UAE or GCC, because there are emerging opportunities throughout the MENA region as a whole, which you can get an idea of this list. Now, just moving to the energy side, as you can see, dominated by the Qatar LNG program, as I mentioned earlier, in terms of contracts awarded year to date. We also got the Bazem full field development in Abu Dhabi. We've got some big Sudair 1,500 megawatt facility in Saudi Arabia, and so on. So you can see, again, life goes on in the oil and gas sector, energy sectors as well. Some notable large contracts dominated by the LNG piece of processing trains won by Chiyoda this year. Okay, so that's the first 5 months, first 6 months of this year, still very disappointing, unfortunately. Now let's look at the short-term and long-term future outlook for the market. So I think we should divide this between longer-term projects and those in the shorter term. And the best way of looking at short-term contracts expected to be awarded this year is by looking at projects currently under tender and in bid. And you can see here that there's about $100 billion worth of projects, either in evaluation or tendered or qualifying, of which Saudi Arabia is the clear market leader at more than $25 billion projects in bid, followed by the UAE, about $17 billion, and Iraq, Oman, Egypt, Qatar, Algeria, and so on. So there's still, in the short term, a large backlog and pipeline of projects expected already in the market, expected to be awarded over the next few months, which is encouraging. And when we're referring to the poor performance this first half of the year, then we are looking forward to that second half of the year, hoping to see an acceleration in project activity. Just what are those projects? Well, here taking a look at the energy projects, which are currently out to bid or tender or qualifications. You can see some very significant projects there. But the Al oil refinery, private sector investment required in Iraq, the Tafut 1 massive solar power program in Algeria, Zarqa Phase 4 in Jordan, of course, Project Wave in the UAE, which is also alongside Project Lightning, a very significant power project coming up in Abu Dhabi. So again, very interesting projects in the energy sector out to bid, and then just as interesting is the construction and transport market projects currently under evaluation. Bid, we've got of course, the unstopped Al Alamein high-speed railway, which everyone's been looking at. Again, the Chinese are likely to be involved in that. The big Atlantic port complex in Morocco, where bids have already been submitted. We've got a couple of US funded defense projects, as well as the new embassy compound in Riyadh, which was out to bid, about $500 million there. Jizan-Tassir highway project, bids have been submitted for that, and a range of other projects, which I don't have time to go into. Okay, so when we're looking longer term, let's look at some of those project drivers. Many of you will be very familiar with these, but I think I just want to linger on one or two, and that is the very strong demographic growth long term in the region. Now, we know that population in some countries may have declined over the last 18 months, 24 months, but in the long run, both the expat population and the local population has been growing and will continue to grow over the next generation or two. And when the population grows, as we see in places like Egypt, there is a very big drive to build social infrastructure, schools, housing, universities, schools, and so forth, and transport infrastructure, and of course, greater power and water treatment and desalination and generation facilities. So high population growth over the next few years is going to be one of the basic drivers of continued project spending. But then we've got frameworks like the Saudi 2030 vision, which is really critical for creating that framework for future project spending. And if you look at projects like NEOM, Amala, Red Sea Project, Qiddiya, Diriyah Gate, this Saudi 2030 vision is all driving. And finally, as well, I just want to point out, of course, the Belt and Road Initiative, Chinese investments. Chinese are winning contractors are winning a huge amount of work at the moment. Their investments are coming in very strongly, and they're really helping to spur and providing momentum for the projects market as a whole in the region. So just looking forward to the MENA long-term pipeline of projects. We've got more than $3.5 trillion of long-term projects in the future pipeline. This is an incredible amount. Sure, even if only half of them happen, because inevitably some projects will get cancelled, postponed, that's still to $1.7 trillion worth of future projects. And we've seen in the last 10 years, we've seen $1 trillion worth of contracts awarded in the GCC alone. And we're looking at $1.7 trillion for the MENA region. That's very feasible. That's very achievable. In terms of the largest markets, we've got Saudi Arabia with over $1.2 trillion, of course, helped by the $500 billion NEOM project. The UAE market, $650 billion. Egypt, Iraq, Kuwait, Iran. And Iran's interesting because sanctions may well be lifted soon. That's definitely going to be a market of interest to people. So we've still got a very positive and optimistic long-term pipeline. So despite all the short-term challenges we've seen, the sluggish market, the decline last year, we still can be quite hopeful in the long run for a lot of opportunities in the years to come. Just in terms of that split, that $3.5 trillion, you can see that construction remains by far the largest single sector going forward. In the previous 2 decades, just under $2 trillion of construction projects planned, about 56% of all projects in the pipeline. Transport, $493 billion. Power, $300 billion. The oil sector, $235 billion, and so on. So quite a broad, diversified mix, but construction is by far and away the most critical sector over the next few years. And then just in terms of longer term projects, to give you a flavour, some of these projects over the next 5-10 years, where we've got massive continued spending in the new capital,
Cairo. We've got the planned metro project in Kuwait, new refinery, of course, in Marais, and various other projects, which you can see here. So there's a broad mix of interesting sector projects across different markets, as you can see here. This is just the tip of the iceberg in terms of future projects, to give you an idea of the sort of flavour, diversity, and both the sectors and countries going forward. So that brings me to the end of my presentation. As I said, it will be recorded and will be sent to you in due course. So if you didn't catch everything, look at it in your own time. If you wish to ask me any questions or wish to get in contact with me at all, please contact me as my email address and telephone number. If you want to WhatsApp me or to email me, please do so. Okay, thank you very much, and hope to speak to you all and see you all soon. And back over to Richard. Thank you.